So if anyone's watching this, please, 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 just don't do that. I had no idea what I was doing, and I very quickly lost about £30,000, which made me realise.
I'm delighted to welcome Jason Sen, who's a veteran trader and technical analyst with over 35 years experience in the financial markets. He began his career in 1987 at the age of 19, trading options on the floor of the London International Financial Futures Exchange Life. What was it like, 19 years of age, jumping on the live floor? Must have been a bit of a Shark Tank, was it?
It was terrifying. It really was terrifying. They're out for money, not friends, so it was very intimidating. You have to have razor quick wits and maths.
What was your approach and what did you change to become a successful trader in the end?
I'm aware of what's going on. I'm aware of the important political events, and of course we've had a lot of that recently with the tariffs. I'm aware of the economics, but I actually don't really bring that into my trading.
What do you think is the one kind of myth that traders kind of fall into the same trap time and time again?
I learned everything the hard way, and I certainly learned that the hard way. You had to have that discipline to do it, and I didn't always have that discipline. The amount of people that have come to me and said, I have lost X amount, and the numbers are huge, staggeringly huge.
Stop trying to chase winning trades, let them come to you. You have to kind of go through the roller coaster ride.
It does make it easier when you're not, when you're not desperate to make money, when you don't have to make money, and when the sums of money that you're playing with are small enough that it doesn't matter. That's actually when you start trading better. Now on a screen you can go buy, enter your stop loss, enter your target, and walk away. You don't even have to be there.
Do you try to keep your portfolio small, or what is it you're trading? Where do you see your legacy in the trading world?
If I stay here, I know I'm just going to blow another £30,000.
Hello and welcome back to
Blokes Trading, to Blokes Trading, to Blokes Trading
podcast. And for sure, you're going in the right direction.
It wasn't as bad as it is now, to be honest.
Sent again. That was it. Hello and welcome back to another episode of Two Blokes Trading. I'm delighted to welcome Jason Sen, who's a veteran trader and technical analyst with over 35 years experience in the financial markets. He began his career in 1987 at the age of 19, trading options on the floor of the London International Financial Futures Exchange Life. We are delighted to welcome you on to our podcast, Jason.
Thank you so much. Thank you for having me.
Thanks for joining us. So tell me, what was it like, 19 years of age, jumping on the live floor? Must have been a bit of a Shark Tank, was it?
Yeah, it was pretty crazy. It was terrifying. It really was terrifying. I remember going down the first day and, there's these huge guys shouting and screaming, all the colour jackets. It's an intense atmosphere, and it's not a welcoming atmosphere. No one's in there saying, hey, come in, try and make some money. They're out for money, not friends. So it was very intimidating.
Sure. So tell me a bit about your background. I mean, what got you into trading in the first place? How did you manage to get at 19 onto the floor? You must have been a bit of a whiz or something to get you in at that early stage.
Probably right place, right time. My dad was a trader and actually had a brokerage account with... he had quite a sizable brokerage account actually with a broker. And he found out that they were looking for people. And I'd probably sent out about 50 or 60 CVs to various different banks. I didn't know what I wanted to do. So I was just literally trying to get a job anywhere in the city. Anyway, I was lucky because this broker that my dad traded through offered me a job as a clerk. So I started actually on the floor of the London Stock Exchange in the traded options market. So I straight into derivatives. But unfortunately, I started in April 87. And it was very exciting. I didn't even know that I'd be on the London Stock Exchange. So I've gone into the office and then an hour later, they're like, okay, come with us. And I'm walking onto the floor of the London Stock Exchange, which of course I'd only seen on TV. But unfortunately, about 6 months later, we had the October 1987 crash, which was amazing to experience. But volumes dried up temporarily and it looked like the stock, there was going to be very little stock market activity. And by December, I lost my job. So I thought that was it. I had like a 9-month career in the city and I thought, oh God, it's over. What am I going to do? But it actually ended up probably being one of the best things that happened to me in my career, because I managed to get a job with a market making company. So I switched from executing orders for clients to trading my own book. Now, it did take me at least 2 or 3 years to get to grips with it. That's a bit of a warning for anyone who thinks they're going to walk into trading and 6 months later, be doing really well. Even in an environment where I was living and breathing trading for, as a full-time job, in the pit and in an office with traders, constantly learning about trading and options and everything, it still took me at least 2 or 3 years to fully understand what I was doing and start to become profitable.
And like, how do you change? Is like in terms of how you're going to the market, how you approach the market, from being in a pit in this kind of crazy atmosphere to like all of a sudden being in an office front of obviously a computer and trading in it in that same way. Were you using any, like, I mean, what experience do you bring over from the floor to electronic trading?
Yeah, good question. At first, the transition wasn't too bad for me, because I went from market making options on the floor to market making options on screen. And in some ways, it was even, I could even say it was easier, because on the floor, you have to have razor quick wits and maths. So when let's say you buy a call spread on the floor, you're immediately trying to calculate your gammas and your deltas, because you've got to do your futures hedge. So you've got to be real quick. And also, you're making your prices. You've got to remember the prices in your mind. It's open outcry. If someone comes in and says, what's the so-and-so call spread? You've got to calculate it quickly in your brain. You've got to know all the option prices. You've got to know if the futures have moved a bit, how to adjust the price in your head. Whereas on screen, that was all done for me. All my prices are on the screen. All I've got to do is monitor the skew and the vol. And as soon as a trade is executed, it's on screen. I know what my delta is. I know how many futures I need to hedge. So in some ways, it was a bit easier than being on the floor. But then I decided to transition to trading futures, because trading options, market making options, you're never flat. You've always got a position. You've always got risk on. So even when you go on holiday, you're spending most of your holiday on the phone saying what's going on, and making sure you've got your hedges on. Even if you've tried to flatten out your position, there's always an element of risk. After doing that for such a long period of time, I decided, I really want to get away from this and be able to move away from the market when I want to and have an actual break. So I moved on to trading futures on screen with my own money, and that I found impossible. I suppose I quite arrogantly thought, if I can run an options book or, trading across dozens of different strikes and different months, how hard can it be to trade the Bund future? It either goes up or down. And I realized that it was a totally different skill set. I had no idea what I was doing, and I very quickly lost about £30,000, which made me realize I'd better find a different approach.
So I guess, what was your approach and what did you change to become a successful trader in the end?
Well, I went out and bought a load of books. Some of those I think are still very popular books, like Trading in the Zone and is it Alexander Elder, his books. So I just read and read and read. I actually decided to go traveling, because I thought, if I stay here, I know I'm just going to blow another £30,000, which I definitely couldn't afford to do. So I thought I'll spend a small fraction of that and I'll go traveling, which I'd never done because I started working at 19. So I went armed with a bag full of books, went around Asia and started to educate myself about discipline and structuring a trade and trade psychology, but most importantly, technical analysis. I realized I had to have a strategy. Sitting in front of a screen and just looking at the order flow, which is kind of what you did on the floor, it wasn't enough for screen trading. You had to find an edge. You had to have a strategy. You have to have a process. That was a very long journey, because the thing is, we were like the first screen traders, if you like. So it wasn't like you could read a book and someone would say, oh yeah, you need a process, you need a setup, you need an entry strategy, you need a trade management strategy, you need an exit strategy, you need an account management strategy, you need to risk 1% per trade, all of these things that which we all know now. It's all out there on YouTube, and it's easy for everyone to learn the rules. We kind of made the rules because there weren't any rules, and those rules didn't necessarily apply when you're market making on on the floor, as I said. So it was a very, very steep learning curve.
Sure. So you kind of push towards technical analysis, and that's what you really focus on at the moment. But how much outside noise do you take into your charts before you go to your charts? Like how much fundamental or sentiment, do you build a bias before you go to your chart, or are you just kind of trading in a format where you're just simply trading on the charts without any noise?
I pretty much am a purely technical trader. Now, obviously, because I'm in the markets and I have been for nearly 40 years. I'm aware of what's going on. I'm aware of the important political events. And of course, we've had a lot of that recently with the tariffs. I'm aware of the economics. But I actually don't really bring that into my trading. It doesn't help me particularly. I'm a short-term trader. I'm not looking at trends over weeks and months. So for me, what happens within a day isn't really affected by fundamentals. Of course, as I speak to you today on Friday, the 2nd of May, we've got the non-farm payroll number out shortly. So that will obviously affect the market. And that's something I have to take into account. The dollar, the gold, stock markets or whatever, I'm sure will be solely focused on that event. But otherwise, I'm really not making decisions based on fundamentals. It's purely technicals. I'm a support and resistance trader. I'm a trend trader. They're just very basic technical analysis techniques, which I have found worked over the last 20 years.
Similar to myself in terms of, I think when it comes, like I kind of like to bring a bias into my kind of trading before I go to my charts. It gives me an idea of whether I'm more willing to be kind of bullish or bearish on the market before I even look at a trade. But certainly in terms of setup, I try to keep it as simple as possible. I just feel like adding too many indicators into your charts can just skew almost like paralysis by analysis. But I mean, you've been trading, like you said, for like 3 decades now. Like, what's the one key pattern or signal that stood the test of time for you, do you think?
Well, for me, the key to what I do is definitely trend trading. And I learned that. I learned everything the hard way. And I certainly learned that the hard way. The market would go up and up and up, and you'd think, okay, it's gone too far. It's got to come back. So you're shorting into a rising market, or even worse, you're thinking, I want to buy this because it's in a bull trend. And then it goes up so much, you think, I'm going to sell it. It must be the high of the day or the high of the week or whatever. You're picking tops in a bull trend. Wow. I don't know about you, but it's a very painful learning experience.
For sure.
And of
100%.
course, the thing is, even if you do manage to pick the high of the day in a bull trend, the pullback probably won't be significant enough to have made it worthwhile, because you just don't get, you don't often get deep pullbacks in a bull market. So, after a very long time, took me way too long to learn. And after losing far too much money, I realized, do you know what? If it's going up, just buy it.
Stick to the trend for sure. And what do you think is the one kind of myth that traders kind of fall into the same trap time and time again with certain technical analysis?
One myth. I think, what I would say is I would advise people to focus on longer term charts. Most people that come to me are very focused on the short term charts, 5-minute, 15-minute, whatever. And that's fine. If you're scalping and it works for you, that's fine. Everyone has their own approach. I don't think anyone has exactly the same approach as another trader. But for me, I can't do that. I think the signals on shorter term charts are just simply not reliable enough. So I focus on the 4-hour chart, where for me, it seems to be the trends on the 4-hour chart, the patterns and the candle formations are just that bit more reliable.
Sure. And so you're trading on like a 4-hour chart, but you're kind of a short-term trader. So obviously I assume then you're kind of going down into the lower time frames as well from the 4-hour to try to find those levels within the shorter time frames to kind of not scalp, but day trade within. Is that right?
Exactly right. Yeah.
And
that's exactly the approach. So I will use the 1-hour chart a lot. I guess, yeah, you're right. What I'm saying is 4-hour chart, I'll be looking, that's where my trend is. That's maybe where my more reliable trend lines are. But you're right. For trade entry, I'll be drilling down into the 1 hour, but not shorter than that, to be honest. I'll rely on the moving averages on the 1-hour chart and, the candle formations. And it gives me enough information to, find 2 or 3 trades in gold in a day.
Sure. So in terms of you trying to find, let's say, a high probability trade, you essentially look at the wider time frames. You're looking at the general trend of the market, and you probably know that anyway because we're looking at the markets every day. We know what where these trends are going. You're shortening up them time frames to look for your entries. Obviously, looking for the ideal place to put your stop losses outside like recent highs or lows or whatever the case may be. You're using moving averages, like you say, and potentially RSI just to understand where the market is. But other than that, that's kind of basically your core technicals.
Yeah, you've just described it as if you're looking at my charting screen. You've nailed it. It's exactly that. Moving averages, trend lines. I use Fibonacci retracements. As I say, trading with the trend. Yeah, exactly what you've said. I actually use the slow stochastic instead of the RSI, but they pretty much do the same thing.
Sure, absolutely. So you obviously came from the trading floor to the trading desk to now set up your own day trade ideas. How did you kind of fall into that?
So I was, as I say, I studied technical analysis. I was getting into it. I actually got a job for a short time. I was living after when the floor shut, I wanted to live in the sun. So we moved down to Gibraltar where you could, have a favorable tax environment. And it was just idyllic for me. Go to the beach on the weekends, that kind of thing. And then when I stopped market making options, I went for a short period of time. I did some broking. I was a derivatives broker down in Gibraltar. I've been studying my technical analysis. And some of the clients there, I told them what I do. And they were like, okay, show me your levels, see how they work. And they were big clients like Deutsche Bank, Morgan Stanley, Bank of America. And the levels started to work and I was getting some good experience. So they would use my levels for hedging purposes. And it just came from there. It worked. And when I left the brokerage company, they said, hey, can we pay you for the service? Can you continue to provide the levels? So initially I had bank clients, and then as they dropped out, or, my clients from a desk left, it was more and more difficult to keep the bank clients. So I've slowly transitioned to providing my service to retail traders.
Very good. And in terms of that, I mean, what difference do you see between, let's say, a retail trader as opposed to maybe more of an institutional trader? What is the main difference you see between the two?
I would say that the bank traders would, I think it would be right to say, they would wait for the flow to come to them. So, right. They were acting as derivatives market makers. They weren't necessarily being proactive and going out there and studying their charts and saying, oh, let's go out and put on this call spread. I don't think that was the case. I didn't go into it in depth with them. But obviously retail traders are not sitting there waiting for the business to come to them. They're being proactive. They have to decide, when am I going to enter the market? How am I going to decide my entry criteria? How am I going to manage my risk? How much am I going to risk? It's a far more refined process than working for a bank, where you say, okay, someone wants to sell us 1,000 call spreads. Yeah, we'll take them on. We'll put the hedge on, and wait for the next order. So there's a lot more to manage and a lot more decisions to make, I think, as a retail trader. And obviously, I think you feel the risk a lot more, because when it's your own money, it's a lot more painful than the money of a bank.
100%. And do you think there's like a common kind of mental block that holds retail traders back?
Yeah, I think there's a lot of mental blocks. I think that the first thing that people need to do, or they don't do, is manage expectations. Because the problem is with trading, unlike pretty much any other job, I would imagine, there is an unlimited amount of money on the table every minute of every day. Even when you go to a casino, okay, I can put $100 on red. I'm only going to make $100. And unless I've got $1 million on the table, I can't bet that. So there is a limit to how much I can make on every bet. But when you're sitting in front of a trading screen, it's literally unlimited. I can buy gold at $10 a point. And if it goes far enough, I can make 100 or 1,000 or 10,000 or 100,000. I mean, it's obviously got to go a long way to make 100,000, but sure. There is an unlimited amount of money. So it can get very exciting very quickly. Mm. And your expectations can be blown away. People come to me and say, I've got $10,000 and I want to turn it into 50. And I'm like, okay, well, you probably can, but you're not going to do that in 3 months. And people's expectations just get completely out of control. Yeah, you get that as well, do you?
Yeah, for sure. 100%. Look, I think there's so much psychological. It's a game of psychology in so many people, and people can't take away their mental emotion or their emotions out of their trade, and that's the biggest problem I've found over the years. It's like, if you can just find a way to think objectively, stop trying to chase the winning trades, let them come to you. Like this, and I suppose that goes into your own psychology. I'm sure that would have shifted from the live floor to moving to electronic trading to being kind of a retail trader now yourself. I mean, you would have seen the shifts yourself. And you have to kind of go through the roller coaster ride during the process of learning how to trade the financial markets. But you have to accept you're going to lose trades along the way and allow that to be a part of the process. Learn from the trades that you've lost, understand why you've lost that trade. You might have had the perfect setup. You just might have got something small wrong. You know, you might have just put your stop loss in the wrong place, or you just not analyzing your losing trades actually gives you more value than analyzing my winning trades. And that's the key. And how do you find, you know, especially in the volatile market, how do you control your mental emotion?
Yeah, those are all actually really important points. You do learn way more from your losing trades. You do have to look at them as lessons. But I'm sure, as you've encountered from what you do, when people start, they think they don't need to use a stop loss. They think they're going to be able to control the losses themselves, and they just don't. It's frightening the amount of people that have come to me and said, I have lost X amount, and the numbers are huge, staggeringly huge. The hole that people get themselves in. And of course, once you've got yourself into a hole where you've already lost more money than you're comfortable with, you're then desperate to get it back, and that usually leads to more horrendous losses. So if anyone's watching this, please just don't do that. They say learn to love your losses, don't they? And that doesn't mean, hey, great, I can't wait to make a loss. It means I've made a loss, let's keep it under control, cut it quickly, move on to the next trade where hopefully I'll make a profit. But if I make a loss, it'll be another small one. I can handle it, and eventually I'll get on a winning streak, or I'll certainly get a winning trade that will hopefully do a 2 or 3 hour and get that money back. Life is so much easier when you take your loss when you know you need to get out, and you just set your stop loss when you enter the trade. Set your stop loss. You know, on the trading floor, we didn't have automatic stop losses. You had to execute them yourself. You had to have that discipline to do it, and I didn't always have that discipline. Now on a screen, you can go buy, enter your stop loss, enter your target, and walk away. You don't even have to be there. Walk the dog, go to the gym, let the trade play out, plan the trade. And if it doesn't work, okay, I've lost 0.5%, 1%, doesn't matter. I'm not emotionally impacted. I can move on to the next trade with confidence. You know, it's just 100%. So basic, but as humans, we seem to struggle to do it. I've mastered it now, but it did take me a long time.
Yeah, for sure. And I suppose it seems like a simple thing for people to understand. Like, you can't trade unless you can accept losses along the way once you minimize them losses. But it's a real basic principle, but it's something that people just can't accept. And it's just that psychological edge. And we talk about edges in trading. It's not just having a strategy that you can find an entry on a chart. That edge is also being able to accept the losses, about understanding, you know, when to let a trade run, when to cut it, when to bring your stop loss up, when to use a trailing stop, when to scale into a trade. All these things, you know, when we're talking about, people say to me, oh, well, I'm looking for this trading edge. And I'm like, well, what do you think a trading edge is? You know, what do you believe that is? Do you think that's kind of a miracle technical and indicator that's going to tell you when to buy or sell? Like, nobody has a crystal ball that's gonna like, it doesn't matter. Look, you've been trading for 35 years. I've been trading for nearly 17 years. There is no crystal ball. You know, all we're doing is trying to stack the odds in our favor. Simple as that. And in terms of, I suppose, for kind of trading a few different asset classes, do you try to keep your portfolio small, or what is it you're trading?
Yeah, do you know what? All of those points really are so important. Okay, so to answer your question, I provide a service to my subscribers where I go out and try and find trade ideas. So that covers gold, silver, oil, and then covers the Forex markets and the US stock indices. Mm-hmm. So I could be looking at 25, 30 markets in a day, trying to cherry pick what I see as the best opportunities. So I very clearly understand my entry strategy. Shouldn't I, after all these years? So, yeah, I mean, I cover way more markets than anyone should. It's just the way my system works. You know, I might pick 15 trades in a day, but I do that in the morning. So I do my analysis for an hour or two, and okay, I'm looking at a trend. Yes, I've got a bull trend here. I've got a support level here because there's an area of confluence with Fibonacci level, a trend line, a moving average, that kind of thing. Right. I'll put it down as a trade opportunity. We may never get there. the market may never hit that. In fact, I'd say probably only 30% of my trade ideas ever get executed. Like you said earlier, no crystal ball. I've no idea what's going to happen today. I've no idea where the markets are going to go. I'll have a bias, but I'm happy to, prepared to be wrong. My subscribers will say to me, oh, I'm long gold. What do you think? And I just say, I haven't got a clue. And anyone who tells you that they that they know where gold is going is lying, or they're just giving you their opinion. And it's just, you can't trade like that. You can't trade on guessing direction.
100%. And that's the beauty of kind of technical analysis as well. It's kind of like, yes, we can identify these, trends, and we can identify key indicators and to give us an idea, but nobody knows where gold's going to go right now. I mean, again, especially in a market where one tweet or one comment from Donald Trump is going to blow up the markets. I've spoke about this before, but in terms of those correlated markets, and I'd like to know your opinion on this. Whereas there were so many correlations, we knew okay, where the safe havens flows are. We know, okay, if something happens, stocks are going up. We know where dollar's going. If gold's coming down, we know all the different correlations, and they seem to have kind of dissipated with all the market noise that's going on at the moment. How have you adapted your trading since Trump's coming to power?
Okay, yeah, that's a really good point. I'm a lot more cautious, obviously. I mean, there's never been a more important time to have that stop loss in place because, like you say, one tweet or a quick comment from him and all hell breaks loose. So you have to make sure that your downside is constantly protected. It's interesting that you said that as well, the correlations, because when the whole tariff thing first kicked off, stock markets collapsed, dollar collapsed, and gold actually collapsed. And that was a weird correlation. Gold, shouldn't that be going up as a safe haven, flight to quality? And of course, the bond markets did go up, which is what they should have done. But I've seen that before when stock markets, when all hell breaks loose and there's no understanding of what's going on. Gold does often do that. It initially goes down. And I think that's margin calls. People liquidating something in order to meet margin calls, maybe in the stocks or whatever, because then gold turned around and obviously went through the roof. I think it's been to 3,500 now, hasn't it? And that was a staggering $600 dollar rally from the 2,900 area when it initially collapsed. So the correlations, you're right, they did get blown out, and you just have to be really, really careful. Anything can happen.
For sure, 100%. So you say that you trade so many markets, you're up every morning, you're doing this, you've published over, I think, 6,500 articles. How do you stay inspired and avoid burnout? Do you enjoy doing what you do right now?
Wow, good question. I've not been asked that before, and you've nailed it, because I'll be honest, I don't trade much anymore. I've actually lost interest in the actual sitting there, executing trades, watching them all day long. I'm lucky. I mean, after being in the markets for so long, I should have really made enough money that I don't have to do it anymore. Otherwise, I'd be a bit of a failure. So I can pick and choose when and if I want to trade. And actually, to be honest, even with my experience, you can still have biases. If I don't have positions on and I'm not actually trading myself, I find I'm that bit more open-minded, less biased, which is better for the service and better for the analysis if you're purely just looking from an objective point of view. But when I do trade, I keep it really small. It's play money, really. I just don't get too involved anymore. So, and it does make it easier when you're not, when you're not desperate to make money, when you don't have to make money, and when the sums of money that you're playing with are small enough that it doesn't matter. That's actually when you start trading better.
Yeah, I agree 100%. And I suppose, what would you say is the proudest moment of your trading career? You've had quite a journey over the last 35 years. What do you think has been the pinnacle of that? And I suppose, where do you see your legacy in the trading world?
I'm actually now I'm really enjoying training people, because I really understand so much about trading, and because I've trained so many people. It sounds a bit corny. I want to give back, and people say, if you're teaching, you're obviously no good. Otherwise, you would actually be trading. But it's genuinely rewarding, because when you're teaching people, you're building up relationships. So a lot of my students have become friends, and and it is it is really rewarding to have someone come along. I'll give you an example. Someone came along to me at the end of last year, nice guy, footballer. And he had a tremendous strategy, a strategy that can return 6, 7, sometimes 8R. But he just had no control over himself. And it was a real challenge for me because normally I have some tweaks and some hacks that I can give people on. They can turn it around quite quickly. This guy would do really well, and then he, typically blow it all. And and I really like this guy. We become good friends. We talk quite often, and that for me recently is a proudest moment because he's turned it round and he is now consistently profitable and doing really, really well. And it's very satisfying for me to see that.
Sure, 100%. I think, look, this industry is full of people that have no interest in the people are trying to teach, or look, just the industry as a whole, unfortunately, has come down this Instagram route of everybody trying to portray a lifestyle or so on. It's just great to have people on our podcast that have the same, ethos that we have here, and genuinely trying to help people in the financial markets. Like we are here to try and help, and give good information and give the best opportunity. And at the end of the day, all we can do as educators and mentors and so on is try to put people on the right path. It's then up to the people themselves to be able to take that on board and take it seriously, for sure.
Yeah, it actually, and you brought up a point earlier where I talked about expectations, and it was really teaching this guy that made me really think deeply about expectations, because he came to me, he said, I've got, I don't know, I can't remember the numbers exactly, but let's say he said, I've got 10,000 euros in an account and I want to turn it into 25,000 euros. That was, we talked about this earlier. And I said, okay, we can do that in 3 or 4 months. It's not unrealistic with the strategy that you have, because you can get 6, 7R out of a trade. But what I realized the problem is he wasn't thinking, I want to get to 25 grand in 3 or 4 months. Every day he had that number in his head, and that was what he was working towards every day. So his risks were out of control. And once I said to him, listen, baby steps, let's try to get to 12,000 euros within the next 3 weeks, 4 weeks. If you can get 20% return, which is possible on your strategy and realistic, then we can try to get to 15 and then 18. And, when he started doing that, then he is on the path to getting to where he wanted to go. So just simple things like that. It was literally just about changing perspectives and managing expectations, and it worked a dream.
Sure. I mean, it's quite incredible that when we look at some of the best hedge funds in the world, and they're producing maybe 15% annually on returns, whereas retail traders, if they get it right, if they really find something that works for them and they have the right strategy, like, returns are incredible. You just need to be able to manage your risk along the way, and that's the absolute key. And tell me, if you could tattoo, let's say, one trading mindset principle on every person's arm that you've ever done mentorship or spoke to, what do you think that one strategy or one point would be?
It's very simple. When you enter a trade, place your stop loss. It's that simple. I think this is the biggest failure point for most people. They just can't bring themselves to put a stop loss in, because what they're doing when they do that, when they enter a trade and put a stop loss in, they're immediately admitting to themselves that this trade might lose money. And they don't want to admit that to themselves.
Sure. And do you think, is there a correlation between the people that you teach or mentor? Is there a specific profile of person do you think does better in trading, or do you think it can be anybody from any walk of life, from any background?
I think it can be from any background. Yeah, for sure. And the good thing about these days is that with prop firm challenges and all that, and that market's become a bit more developed now. I think it was a bit scammy at first, but I think it's become a bit more developed, and the companies that are surviving now are taking it a bit more seriously. So with tools like that, yeah, anyone with $100 can get funded if they're disciplined enough. So the opportunities are there for everybody. I think the people that come to me are those that have tried it. I think so many people try trading and they end up in two groups. They try it, they weren't serious enough, they screwed up, they realize this is too much for me, I can't do it, and they quit. And then others go, okay, I've screwed up, I've lost money, but I know I can do this and I'm really determined. Those are the kind of people that come to me, and they know, I guess they know what they don't know, or they know what they need to do, and then they want someone to fix it.
For sure. I think if I could say there's one core element that I have seen through people who have gone on to be successful in trading is resilience. It's and controlling their emotion. I think they're the two things. If you can control your emotion, be resilient, and take as much information as you can on board, and treat this like a job. Even if it's a part-time, you take a couple of trades in the morning or the evening, you have to treat it like a job. You have to treat it with have a professional approach to what you're doing if you want to succeed in this industry for sure. So Jason, it's been an absolute pleasure having you on today. Yeah, it really has. And, you know, getting people like yourself onto our podcast with the backgrounds that you guys have, with the knowledge that you have and all the experience you've built up over the years. If someone can take away one thing out of this podcast, it's definitely something that we want to do for our listeners. So thank you so much again.
Thank you. Been great fun. Great questions. Really appreciate it.
No problem. It's a pleasure. Take care.
Cheers. Bye-bye.